so understanding property taxes, right? Um, as you guys know, this is nothing new. That property taxes are basically due twice a year, right? First half and second half. Okay. By the way, you guys will get a copy of this presentation. I'll send this over to Justin, and then he can send it to everybody who has attending. Okay. Here's a very important thing when regarding to property taxes, right? Because remember, property taxes are based on the purchase price or acquisition cost. Now, under Prop 13, the county is allowed to reassess the property at a change of ownership. Okay, so this is very critical, as you know, with Prop 19. Okay, so this is just a basic breakdown of how property taxes are calculated. The main thing is 1% goes to the counties. Okay, so every county in California is allowed to charge the 1%, and then everything else comes after that. Yeah. So this is just an example. As you can see here, the assessed value, the current taxes are 5,600. But if you really look at it, the tax rate is actually 1.672. Now, why is that so high? Well, it's because there are other things that's included in there that may not be included in other areas. Okay? So this is just an example of how it's done. So you can see the 1% county, and then of course there's the mosquito, vector control, library parcel, right? So there's different things that can go into your property tax bill. Okay. So remember, each city, each county does their taxes differently. Okay. And then sometimes they're voter approved ones also. Okay. Sometimes there's some school boards in there. Here, if you look at the very bottom, there's a garbage service fee. So for this property, they don't get a garbage bill. They actually pay their garbage bill through their property taxes. Okay. Now, one thing that you guys always should explain to your clients are the supplemental tax bill. Okay, so I'll let you guys, most of you guys probably know this already, but we're not going to cover that, but please just review it when you can. Okay, Prop 13. Remember, what is Prop 13, right? Well, it just means that the main thing that you guys need to understand is the 2% maximum increase per year. Okay, that's the benefit of in California is that your property tax assessment cannot go up more than 2% per year aggregately. Okay. Now, it just kind of explains to you what that 2% is. Okay. I'll let you guys read this because I don't want to spend too much time here. Okay. Prop 8, okay? A lot of people don't know what Prop 8 is, okay? When the market goes down, okay, the county is allowed to lower your property tax bill to the current market value. So if let's say, you were one of those people like me who bought a rental property in 2005, right? The market went down in 2009, 2010. Well, guess what? Under Prop 8, I was able to apply for a temporary reduction of my property tax assessment, okay, to the current market value. Later on, they caught up, okay. After like 5 years, they all caught back up. So again, but for the first couple of years, I didn't have to pay the current tax bill. We actually got a reduction, okay. So make sure you guys check into Prop 8. A lot of people don't know about that because the market is going to probably go down sometime in the future. And Prop 8 is a good thing for our clients to know. Okay, so what is Prop 13, Prop 8? Prop 13 just gives you a permanent ceiling on what the assessment value can be. Prop 8 is just the floor, okay, where it can go down. So here we go, Prop 60, right? Everyone should know that Prop 60, all that means is that Prop 60 is basically, it allows seniors, right, to transfer their property tax base from the same county, right? So if you're moving from anywhere in California, as long as it's in the same county, you can transfer your tax basis, okay? But it only applies for principal residence, and it's a one-time deal, Okay. So remember 60, same county, one-time deal. Okay. Prop 90 is basically the same thing, although you can go to a different county. Okay. So like in the Bay Area, we have 3 counties that qualify: Alameda, San Mateo, and Santa Clara counties. Okay. So if, let's say, you're moving from San Francisco to San Mateo County, you just have to call the San Mateo County, and then they will allow you to transfer your low tax base from San Francisco to San Mateo County. Okay. So again, there's only certain counties that qualify for this. Okay, that are allowed to, but there's only 3 here in the Bay Area. Okay. So Alameda County, San Mateo County, and Santa Clara County, they want you guys to move to those areas. Okay. And then there's the Prop 58, right? Everyone knows Prop 58. This is your parent to child transfer. Okay. This is something I personally have done. Okay. When I purchased my my parents' home, and basically I was able to get their low property tax basis. Okay. So I bought it, at fair market value, and then the benefit of me buying it was, I would get their low property tax base. So instead of, the property tax bill would have been like around $10,000. Instead, it was only about $1,500 because I was able to get their low property tax basis. Okay, so again, these are just one-time deals. Okay, and then there's Prop 193. Prop 193 is basically from your grandparents to a grandchild. Okay, again, and then of course there's 110. Okay, 110 is for the severely disabled. Okay, so again, there's different propositions that was have been passed as a way to transfer their low tax basis. Okay, everyone should know about the homeowner exemption, right? If you're owner occupying a property, you should be able to get this homeowner exemption, and you get a $7,000 reduction in assessed value. Roughly, basically, it's about $90 worth of tax savings for you. Now, what's Prop 19, right? Prop 19, it allows us to transfer our property tax basis to anywhere in California now, right? 55 and over, or if you're disabled, or wildfire or natural disaster victim, right? So, you can use it up to 3 times. Now, the difference is if your house get caught in wildfire like more than 3 times, there's no limit. Okay, okay. There's no limit if it's Oops. Okay. Primary residence is limited to 3 times, right? 3 times in your lifetime. But you have to be 55 and over or disabled. Okay. But if your house is destroyed by wildfire, there's no limit. So if your house keeps getting burnt down, you can keep transferring your low tax basis. Okay. Okay. So is there any open questions right now? We're going to get into more of the Prop 19. So is there any questions that Kathy, that's come up?
I have a question myself. So you said limits to occupied inheritance. Does that mean that that's an inheritance that you already have to be occupying before you can take that, or when you move into the inheritance?
Okay. If you inherit a property, right? Mm-hmm. If you inherit a property, if you want to get the low tax basis, right? You would have to move into the property as your primary residence. Okay.
Thank you. And then we have another question. What's the 3 times on Prop 19? I think you covered that, but if you'd like to answer that.
In Prop 19, you can transfer your property tax basis up to 3 times in your lifetime. Okay, so if let's say when you hit 55, you want to move somewhere, and then later on when you turn 60, you want to move somewhere else, you can keep transferring your low tax basis, with you up to 3 times. Before, you can only use it 1 time. Okay.
Now, is there a cap on that up to $2 million, or can you go, take a $100,000 basis purchase and then can you move that up into a $10 million property?
Yeah. The only difference is, okay, now when you move up, right? Okay, because usually the benefit of Prop 19 or props, all these proposition is that, it's supposed to help, seniors, right, who have limited income, or so the purpose of it is to help out seniors. So, now with Prop 19, okay, now because a lot of people are here in the Bay Area, they have they want to move, but they was like they have to move up in price. So if let's say Kathy, you want to move to a higher end place, or because you can afford more now, right? But you want to transfer your low tax base. So basically, what you would have to do is add. So let me see if I can get my other screen here. Okay. All right. So let's go over Prop 19, right? So if you look at Prop 19, right? Okay, so homeowners who are over 55, severely disabled, or whose homes were destroyed by fire, right? Transfer their basis, regard anywhere in California, right? Because remember, what Prop 19 did is it expanded Prop 90, right? Because remember, Prop 90 was you can transfer, your tax basis to a cross county, right? Same county, it was no big deal before, right? Now, you can move anywhere in California, and you can transfer your low tax basis if it benefits you, right? You must do it within 2 years, okay? And again, you can do it up to 3 times. Now, this applies starting, April 1st, 2021, okay? So, so we have another 4 months before this proposition actually takes into effect, okay? So just remember that, Prop 19 expanded Proposition 90, okay? So now, if you want to move anywhere in California, as long as it's beneficial for you, you can transfer your low tax basis, okay? Remember, you're not transferring your tax bill, you're transferring your tax assessment, okay?
Right. So we also have some other questions coming in. Okay. What about nephew and aunt jointly own the property and she is 62? When the 62-year-old sells her share to the nephew and buys another property, how does it affect the property tax in the new home?
Okay. With regards to the, remember, aunts and uncles, there's no protection, okay? So, this is only for, Prop 58 is parent to child, okay? And then Prop 193 is grandparent to grandchild, okay? So for that scenario, there is no benefit, okay? They will be reassessed at the current market value. So again, what you're trying to do is find exemptions, okay? So that way you can transfer your low tax basis. So with regards to aunts and uncles, things like that, cousins, there's no protection, okay?
Okay. And then we had the question, what is deemed severely disabled?
Basically, there is a definition in one of the slides. Is in there, okay? So what's the nearest quickest answer? There's a definition in there that the Franchise Tax Board has given us, So just look at the slides later, okay?
So could I just add, for those of us that have sold using VA loans, the VA also has a list of what's considered severely disabled, which also goes to the federal ADA, and you might want to reference that to consider what's severely disabled. You might be surprised at what some disabilities are. Another question is, what if the home is sold before April 2021 and the new home isn't purchased until after April 2021?
Okay, that's not clear in the law yet, right? So a lot of people are saying just wait until when this law happens. So if let's say you're selling one of the properties now, right? Your primary residence now, right? And then later on, after April 1st, 2021, is when you actually buy the new house. Can you qualify? The law is not clear yet, but you'll probably be able to qualify, but the law is not clear yet. Okay, so there's a lot of things that's going to be cleared up in the next couple of months. But right now, this is the way the law is written, and there's some unclarity that's out there. Okay.
Okay, and we have another question regarding the aunt and the nephew owning a home together. So if the aunt sells her house or her portion of the house, how will the tax base be for the aunt and her future home? She can't take, I mean, if there's two people on that deed and aunt sells her share, she can't take her share to her new property, can she? Because there's still a surviving or a remaining member on that deed, right?
Okay, so if let's say so the aunt is 62, right? I think is what you said, right?
Correct.
It's a senior, right? She sells her half to the nephew, right? Correct. Okay, so so right now, when she sells, right, she's gonna get her half out. Okay, so now she can use those funds to buy another property. She can use her Proposition 60 or 90 to move into another property and get her low tax basis there. So it can happen that way. Okay. All right. Okay. So one of the benefits of Prop 19 now, okay, is you can actually move upwards in value. Okay. Because sometimes people, they can afford higher, right, than what they sold their property for. Okay, so what basically happens at that time is, if you guys look at this, okay, if you're gonna buy upwards, okay, so if you do the math here, okay, if you just follow, what the definitions are. So if let's say I'm selling the property for $1 million, right? And it has a transfer value of 500,000. So that means is, my tax bill is based on 500, but I'm selling it for $1 million. Okay. So I'm paying taxes on 500, but it's worth $1 million. Okay. Now, I'm going to buy another property. Okay. I'm going to sell for 1 million. I'm going to buy it for another house for 1.5 million. So I went up. Before I couldn't do that. I couldn't do it, right? Now, with Prop 19, when it comes to law, okay, basically you're going to get the 500,000 tax base that you had, okay, plus the 1.5 million, in parentheses, minus the 1 million, okay. So which means that you add another $500,000, right? This is the increase in value difference, 1 million to 1.5, right? So basically what happened is, now you can, you just have to pay an additional $500,000 in tax assessment. Okay, so instead of paying 1.5 million for the new property, it's actually $1 million tax assessment. Okay, hopefully that made sense. Okay, if not, just review the notes later, and then hopefully it'll make more sense. Then if it still doesn't make sense, just call me anytime. Okay. All right. So here's the new thing that a lot of people don't like, is because they really did away with Proposition 58 193 with regards to rental properties. Okay, you can still transfer your property tax basis from your parents to you, from your grandparents to your grandchild. That can still happen, but now, unless they move into the property, okay, you're not going to get the full tax exemption. Okay, okay, if it's a rental property, as it shows here, right? You're limited before. Now you were able to, up to $1 million of assessment were exempt. Okay, for rental properties. Well, guess what? That has gone away, or it will go away. Okay, come February 16th, 2021. So this is the shorter time frame. Okay, so a lot of people are hustling right now to set up, different trusts, or family trust. So again, there's a lot of lawyers that's gonna be doing workshops on this, because this is something very important. Okay. So again, this is just how calculations works. Okay, with regards to investment properties. Okay, if it's a primary residence, no big deal. You get your tax transfer from what they're paying. Okay, so that has not changed. The only change it has is with regards to rental properties, investment properties that's inherited. Okay. Any questions?
So you say, so this would be a living transfer, or this would be a trust? So if somebody is still alive and say they have to go into assisted living and they transfer that property to their children, or when they've already passed and it's passed through the trust?
It doesn't matter, right?
Okay.
When it happens, okay. Remember, it doesn't matter if you buy it or you inherited it. Okay. So at the time of transfer of title, when the title changes hands, what's the scenario, right? Can you qualify for an exemption, or are you going to pay for the full reassessments? Okay. So again, what we're trying to do is find exemptions from having to avoid a full reassessment of the property. Okay.
Okay, perfect. Now let me see. I don't have any new questions. Oh, here. Isn't there a change for inherited primary residence as well? Just a $1 million exemption on increased value.
Okay. Okay, so the way that works is, okay, it's also on the slide. So the way that works is, if let's say you get what they call, so if let's say, remember the scenario earlier, it's a $500,000 tax assessment, right? Okay. So now, if the property value, okay, is more than $1 million above that $500,000. So now, if let's say it's worth like $2 million, okay, but your tax assessment is only $500,000. So now it's worth more than $1.5 million difference. Okay, so therefore there will be a different assessment calculation there. You're going to get the reduction of the million, okay, but then you have to make up the extra $500,000, okay, in your property tax assessment. So, so basically, if you're inheriting a very expensive property, you're going to have to pay something more than what you would have paid before. Okay, so basically, they're trying to, or the way Prop 19 did is, it was trying to increase, property tax money, basically, right? So yeah, so in that case, yeah, there's a limitation on that. Okay.
Okay.
All right. So, let's see.
I think I have one more question that just popped in. Do you have to wait to sell your home until after April 2021?
Do you have to wait till 20?
So if you want to take this exemption, do you have to wait until to sell your home until after April 1st, 2021, before you purchase a new one or before you inherit a new one? Or can you sell it, say, January 1st, and then buy the new home? Let's say you close the new home on April 2nd, 2021.
Okay.
So there's that lag time, and I think that's the lag time that you were speaking of earlier, that it's a gray area right now, and we're waiting to hear.
Yep. Until,
Okay.
What we're telling our clients is just wait, unless you can find someone in the county to give you the right answer and get it in writing, because right now it's unclear, right? I've called the county before, and they don't know. So because again, it's not fully done yet. Okay.
And I would suggest to everybody that you do call your assessor's office and get to know the person who's the assessor's assistant. I've done that here in Contra Costa County, and she's wonderful, and she's always willing to answer questions. So please, if you haven't done that, I think as realtors, we need to do that as a service to ourselves and to our clients. I think that's really important that you do that. I had another question and it disappeared. Interesting. How will Prop 19 affect heirs inheriting property with this new proposition?
Okay. As we said on one of the slides, right? When kids inherit the property, okay, unless they move into it as their primary, they will be reassessed at full market value at the time of inheritance. So let's say a rental property, right? You're not going to move into it. You want to keep it as a rental. Guess what? They're going to reassess the property at full market value, as if you bought it that day. So remember, Prop 13 allows the county to reassess the value at full market value at the time of transfer of title, right? So again, in this scenario with Prop 19, the county basically, if you inherit a property, unless you move into it, you're going to have to pay full market value. Okay, as far as your assessment is concerned. Okay.
And then I have another question from Cindy Chan. Are there property tax exemptions for transfer between siblings, or will it stay as old property tax rate?
No, siblings, there is no exemption.
Okay. And Lean Selly keeps asking, what's the 3 times on Prop 19? Lean, that is where you can take this exemption with you to 3 different properties, not 3 at one time, but you can use the Prop 19 exemption 3 times.
Yeah. So if, let's say, you want to use it when you turn 55, and then you want to use it again, to move somewhere else when you turn 65, and then you can use it one more time when you turn 75, right? Okay.
Or like my mother, who constantly moves, and now at 82 years old is packing again to move yet again. So just keep using it.
Yep. Now, like I said, if you have to use it a 4th time, just make sure it gets burnt down by wildfire.
You didn't say that. Come on.
Okay.
We don't recommend that. Okay.
No, it has to be natural fire, wildfire. Yeah. Okay. So it cannot be arson. Okay. Cannot be arson. Right? So, yeah. So again, that's one of the biggest thing in Prop 19 is because, wildfire victims, they do have that exemption of more, it could be more than 3 times. Okay.
And it's also, and truthfully, Greg, it's not wildfire only. It's wildfire, earthquake, flood,
natural disaster.
Natural disasters. Yep.
So someone asked me, what if the house slides downhill, right? Is that natural disaster? I don't know. I cannot answer that. So I always tell them to call the county. Okay. Because again, it's their definition. Okay. They're the one that's going to have to say yes or no to the exemption or not. Okay.
Hey, Jean Joe has a really good question here. What are your thoughts on people considering moving property into an LLC and giving percentages to children now, or transferring property prior to February 16th?
Okay. There's different ways that different people are trying to find smart ways to do it. Remember, okay, the county looks at ownership, right? So whenever there's a transfer of ownership or there's a change of ownership, that's where it gets reassessed, right, at full market value, unless you can find an exemption. Okay. Now, if you're gonna start setting up LLCs and all that, remember, when you add someone or when you change the name of it, right, there's a transfer of title, okay, which may trigger a reassessment, okay. Sometimes when you refinance and there's only, let's say, your husband and wife, and then you refinance their property under only one name, sometimes it gets reassessed because sometimes they see, oh, how come there's only one person now instead of two, right? And then that's where you got to make sure that that form called the preliminary change of ownership form, okay, the PCOR, okay, that's filled out properly, because that's where one of the exemption is. Like, why are you adding a person in title? Or why are you removing someone in title? It tells, because there are some exemptions that you can create, so that way it doesn't get reassessed. Now, as far as adding people now, that's a legal question. So I would tell you to talk to your attorney. But as far as how to how to avoid these reassessment, there's going to be some lawyers, like I said, we'll probably get some resources as these things do come into law and more clarity is done. Okay.
Eric Relos, of course. Eric, he wants to know if he can buy mom's house and get her current property tax assessment.
Yes.
And then
so
if he
I'm
sells
assuming-
it after occupying it for, say, 2 years, can he transfer that assessment to the new property?
Okay. So here's the question, right? I'm assuming first mom is 55 and over, right? Right. So so he buys it from her, right? Now, if as long as she's not using that transfer of reassessment, or she's not using the low tax basis to another property that she wants to buy, then he can definitely keep that under Prop 58. Okay, parent to child transfer. Okay, now
Okay.
later on you said after 2 years he decides to sell. Well, my question is he 55 at that time, right? If he's not,
well, Eric's a little ageless, so I don't know.
Okay.
Yeah,
If he's not 55, right, he cannot transfer or move his tax basis. Okay. So just like when I did it, with my parents, I could not when I decided to move, I couldn't transfer that low tax basis. So I just kept it as a rental, converted into a rental. So I have a low tax basis on it, right?
If he is 55 or older, he can though.
Yeah.
Okay.
Yeah.
Okay.
So that's Prop 19 now. Okay, so he can transfer it. Okay.
So that being said, Greg, if somebody does buy the property from their parents and assumes that new tax basis there, the parents don't have, I just want to make it clear, the parents do not have to move out. You can buy the house from your parents and your parents can still stay there. It's only about changing owner or changing name on title, not about who's actually occupying it.
Yeah.
So you are supposed to be an owner occupant in order to make this work for you.
Technically, yes.
Right, and that's where.
Yeah. So again, so what does it mean when you own or occupy, right? You don't have to be living in the property to be an owner occupied property. Okay. You just have to not be renting it out. Okay. So that's the difference. Okay. So because remember the homeowner exemption, right? So basically that's where you tell the county, I'm occupying as an owner occupied, right? Remember when you borrowed money from the bank, you're saying you're owner occupying it or not, right? So there are different places where you're saying it's either owner occupied or not. Okay.
So that being said, Measure Y, I believe it's Measure Y in Oakland, says that now if you are purchasing a home, and I don't know if it's, and forgive me for not knowing exactly, I don't know if it's if you are owner occupied or non-owner occupied, you have to pay a $6,000 assessment in case the home becomes vacant and, you know, Oakland has to take care of it for you. When you take this Prop 19 and move it into a home in Oakland, which many of us will do, then you still have to pay that local $6,000 assessment, correct?
Yes. Yeah, those are separate things.
Okay.
Because remember, all we're talking about here is property tax assessments.
Okay. Okay. Zin wants to know, she says, I have a client that has 3 investment properties and wants to transfer 1 property to each of his kids. If he wants to take advantage of the current Prop 19, can he transfer all 3 properties at once to each child prior to February 16th, 2020?
Okay. Now, remember, Prop 19, right? Unless they're going to own or occupy it, right? You know, as far as, you know, their kids, right? There is no benefit, okay? Because again, remember, they got rid of that loophole for rental properties, right? So if they want to do it beforehand, they can certainly do it. Yeah.
But if he's transferring, then we're going back to Prop 58 is really what she's talking about, correct?
Let me see. No, with regards to, you know, the parent to child. Yeah.
Right. So Zin, I think you would have to refer more to Prop 58 regarding this one because it's a transfer and not a purchase.
Okay.
Let me see. There is one on the chats by Lucky. Does a person have to be disabled or just need to be 55? Not both, correct?
Yes. Yeah, it has to be one of 3 things, right? 55 and over, severely disabled, right? Or wildfire or natural disaster victims, right? So it's one of those 3 groups. Yeah.
Respectively, yeah. Okay.
Yeah. Okay. Yeah, you don't have to be all 3. Okay.
No, all the above. No, for sure.
Yeah. It's one or the other, right? So, okay, all right, guys. So, is there any other last minute questions before?
Greg, I have one more question. I have a client that purchases homes for assisted care facilities, and should he purchase a home for that, would he be able to take a tax base from wherever to purchase the house with his corporation? Could the corporation pay that lower tax?
Probably not, okay? Because this is supposed to be for residential properties, right? This is supposed to be for owner-occupied properties. That's the basis of it, okay? So when you do a business, it's no longer residential. It's not.
Well, he purchases in neighborhoods. I mean, he buys, you know, these big sprawling single-story homes out here in Brentwood, and you know, so they are in neighborhoods, and you know, he does not occupy them, obviously. But should somebody like him buy one because they want to create an assisted living facility, and they do live in it, but it's their business, you know,
if it's their business, right? Are they claiming it as do they have the homeowner exemption? Because again, that's where the county knows, are you claiming it as your homeowner exemption, right? So.
Okay, good.
Okay.
All right. Greg, any other just parting thoughts, any other sort of advice, anything else to be mindful of moving forward as we head into 2021?
No, you know, just be excited that 2021 is here. You know,
right?
It's great, you know, and the way the market is right now, it's great because again, you know, a lack of inventory is actually helping our market. Because again, you know, if you're a seller, right? So it all depends who you are, right? But you know, with regards to, you know, Prop 19, just make sure you guys review the notes. And again, you know, I welcome any questions in case you guys have any scenarios you guys want to discuss in the future. But yeah, just stay tuned. You know, there'll be some new updates in the first quarter, and then we'll see where we go from there.
Sure.
Okay, and Greg, you'll have those PowerPoint slides available for us as a file. We can send those to people.
Yeah.
Thank you.
And also there's one that's going to be an attachment to that. It's called the 2021 real estate laws. Okay, that I'm going to attach also.
Thank you so much.
Great. Greg, thank you so much for your time. Kathy, thank you so much for moderating. Once
you.
again, to our sponsors, Bank of America, Wells Fargo, Citibank, Bank of the West, HSBC, and Chase Bank. To all our attendees for ARIA, Greater East Bay chapter. So this is our last event, our last webinar of the year. I know it's been a very interesting year for 2020. I know that a lot of our events have been virtual. Just know that on behalf of ARIA Greater East Bay, we miss you guys. We wish you happy holidays. And, you know, for 2021, we have a full slate of events, most likely to start the year as we transition to a new norm. It's going to remain virtual, but stay tuned. We've had a very, you know, in terms of our calendar of events, we've had to change a lot of things that we had planned for 2020, but that has not deterred us. This past year for ARIA Greater East Bay, we won Chapter of the Year, and we also won the Emeritus Award. So just know that myself, my board, we are going to run it back for 2021. Yeah, it's pretty much the same squad, and we remain very enthused for 2021. So thank you so much for your time. And if there's any other questions, please let me know. I'll follow this up with the YouTube video, the PowerPoint slides, and all the other follow-up information on an email, okay?
Okay, thank you.
All right, guys. Greg, Kathy, thank you so much, okay?
Thank you.
Everybody.
Okay,
Take care, everybody. Okay, bye-bye.